We're trading at a very, very important level. We are trading in the critical level, actually, looking at the overall market. Buyers have gained a lot of momentum, about 35% run since the March lows. And however, the horrendous economic and fundamental data still pouring out. And bears are arguing that this is the bull rally within a bear market, right? And so in this video, I want to share with you, I want to reveal it to you that if this thing happens, if this one thing happens, it is all over. If this one thing happens, and I'm going to reveal that to you in this video, in this session today. We have a lot to cover, right? And it's all coming up right now. Ladies and gentlemen, welcome to the market update. My name is Kay Kim, and let's begin with our analysis here together. Today we have a lot to cover. We're going to be covering Spider, semiconductor, and we'll be covering Apple, Microsoft, Zoom, BYND, Peloton, LYFT, Uber, Square, and let's go with GLD today, gold shares. And then as always, we'll be ending the video with the Bitcoin. So as I've said in this video, or introduction of this video, that there's just one thing. As we're trading in a critical level, if this one thing happens, it's gonna be all over. And what I mean by that is it's gonna be all over for the bulls, it's gonna be all over for the bears if this one thing happens. And I'm going to talk about that, but before we get into it, let's do a follow-up analysis, right? Since last night's daily update. So here is the S&P 500 65-minute chart. S&P is up about 1.65%. And we've been talking about how bulls been attempting to fill the gap. And they've been actually missing the mark pretty much throughout this week, right? Every attempt to fill the gap, they failed, right? It happened here. You can see that there was a gap here. It was not filled. It happened again yesterday. That gap was not filled. And today, it looks like they did. It looks like they got very tiny of it. But we're going to categorize this as this gap has been filled. So it looks like bulls are learning. Bulls are gaining momentum here, right? So let's do a little bit of maintenance real quick. So there is gap here, right? So we gapped up today. And you can see how it came down to prior resistance. And that was a scenario that I laid out for you guys yesterday for the buyers, right? They want to gap it up. They want to get up, right? Fill the gap, or they want to get up and then pull back, not fill the gap. They want to get up, right? And then pull back, retest prior resistance and new support, and we bounced higher, pull back a little bit. So we were right at that gap area. And, you know, two other times this week, this week, when we saw the pullback, it actually came all the way down to retesting that up gap, right? Well, this time actually looked like it was gonna fail, as you can see right here, right? But it never came all the way down to retest the gap area. We actually stopped short and buyers showed up this time. So it wasn't like the other times where the gap was constantly getting retested, as you can see here, and same with here, right? After failing to fill the gap, here, the pullback came to retest the gap. This time we stopped short in the middle of it, and then we actually end the day strong. This is the first time we are seeing that, this week. after the gap fill attempt, right? Because every time it looked like towards the end of the day, we saw a weakness. That was the last 3 days right there. That's the last hour, right? That was what? Friday, Thursday, Wednesday, Tuesday. So that's Tuesday, that's Wednesday, and that's Thursday, right? So Tuesday, Wednesday, Thursday, Friday. So you can see how Tuesday we ended the day with weakness. Wednesday also ended the day with the weakness. Thursday, it's not as bad because you can see there's a little bit lower wick there. But still, we did see the fall towards last 2 hours. This is the first time since Tuesday we are seeing a strength last 2 hours. And for the first time this week, that gap fill attempt has been successful. That gap has been now filled, right? So this is actually very bullish signal. More of a midterm because gap just got filled. So I think the best way for the buyers is probably gap it up again. If not, we talked about how when the gap gets filled, it does act as resistance. We have to be fair with our analysis because I've been talking about when the gap gets filled, you can see the gap was filled, that's going to be acting as support. Let's be fair. When the down gap gets filled, it is going to act as resistance, right? Unless we see another gap up above it. Because once gap gets filled, you want to treat that level as resistance. Just like any kind of support, any kind of resistance, bulls or bears can gap it up. And that's what buyers been doing pretty much all throughout this week. They've been just gapping up potential resistance. I think the important resistance was here, 289-ish, right? Bulls just gapped it up. They didn't want to deal with that level. So the gap got filled today. Gap from all the way from April 29th. That's a resistance. Bulls need to gap it up. Otherwise, bears are going to try to bring it down early tomorrow morning. So let's go to this level. And I think I'm going to reveal this to you now that we're at a critical juncture. We're at an important level, right? We're now at the level where you can see even my long-term moving average is now moving sideways, right? So you can see that the long-term moving average is telling us that we are in a sideways market. Because we're not, because the market hasn't gone down. We haven't continued with that bearish downtrend, which is lower highs and lower lows, because bulls have made so much momentum to the upside. And that's 35% gain. Let's double check from the lows. Yeah, that's 34% gain. So bulls have made, astounding run. I mean, this must have been the fastest recovery ever, right? We've probably never seen this kind of recovery after this kind of drawdown. I mean, that drawdown was also record high, right? How fast that thing came down and just the way the market's been moving higher. Obviously, bulls are not going to be as fast as bears, but that's also been probably the strongest, fastest reversal ever recorded in history so far. So we're at this juncture, a very, very important juncture, and just the way the market is behaving, I think what's going to happen is we're about to see some big move, either to the upside or downside. And this is what I'm proposing. And if this one thing happens, it is all over for bears. And what it is this. And it doesn't have to be Monday or Tuesday, we can kind of hang around here in this vicinity. We may fizzle up and down, right? But either next week or early, week after, if buyers, you see this big, that's a pretty sizable gap. The reason why I'm telling you this now at this level is because bulls have gained so much momentum. 35% run. 35% run since March 23rd. 35. Okay. That's in about a month, a little over a month. We just made a 35% run, right? And just the way the market has been, behaving. And slowly the bulls have gained momentum. And there's another part coming. There's a bear side also coming, because if this one thing happens for bears, it's all over for bulls also. So first I want to cover the bullish side. So if buyers can gap it up here, anywhere above 303 or 304. 303, 304, somewhere in this vicinity, that's about 3.3% gap up. 3.5% gap up. 3.5% gap up somewhere in this vicinity. So either sometime next week or week after, I'm not sure. Obviously, we'll follow up next week on the daily update videos. We gap up above 303. And that's only going to work if the gap is going to be that big. It can't be going up here a little bit or gapping up a little bit. It has to gap up entirety of this gap. Remember, there's a gap here. This is where it closed, right? And that's where it opened. We marched higher on this day, March 6th. There's a gap here. That's where it closed. You see the top of his candle, and that's where it opened. So there's a gap from here to here. So there's actually 2 parts gap. But that's gap. There's a gap here, there's gap there. There are 2 gaps. So buyers must gap over those 2 gaps. And in that process, you see my pink moving average. That's a long-term primary moving average, right? That's a very long-term primary moving average. That's been moving sideways for some time, pretty much this entire year, telling us that there's no trend. We get that there is no trend. So looking at things long term, because if you look at things long term, market hasn't gone anywhere in the last 3-4 years, correct? Yes, and that's what that long term moving average is representing right now, moving sideways. So, because a lot of time we hit that long term moving average, we did see some pullback. We're back at it. So by gapping up above this level, right, 303, we're gapping up above the long term moving average. And we're gapping up above this big gap area. If that happens, ladies and gentlemen, this entire V-shaped move is going to become one big giant island bottom reversal. If that happens, if this happens, we'll get up here and fill this gap. And then we're going to fall. And then we're probably going to continue. Remember, just because that happened doesn't mean it's going to go straight up. Market moves in an up and down movement. That's what we call an uptrend. Higher lows and higher highs. We've been talking about that last week, right? So just because we see a huge gap up doesn't mean it's going to go straight up to all-time high. No. It's going to go up here and fill this gap. It's going to pull back, retest some of these long-term moving averages, right? And then it's going to go after 333. And it's all over for bears at that point. At that point, you're going to start preparing for 360, 380. That's a bullish case. And here's a bearish case. If this one thing happens for bears, at this point, because the buyers have built so much momentum, and there are some complacency in the market, in the streets right now, right? We've been seeing some complacency. Fear is slowly evaporating from the market. Is that correct? Right? You see more and more buyers are gaining confidence. Even these mainstream medias, man, pushing out some crazy articles down here all throughout this move. March, April, all throughout the move. Even in May. Like this is the, Bear market. This is a bull rally in a bear market. Crash is still coming. Great Depression. Unemployment rate is lowest reading since 1929. I mean, just horrendous data everywhere. The coronavirus stuff, just right. But just last week, we've been witnessing some bullish mainstream media writing bullish articles, right? The V-shaped reversal is new bull market is here, or V-shaped reversal is evident, or I'm starting to see these bullish articles that are coming out from the mainstream media. That tells us there's some not a whole lot, but just in the month of May, I think also in the month of April, like late April, we've been just really sideways, and there was some volatility, but compared to what we've seen in the March, not so much. The market's been really pushing every day. It's been grinding, but it's always been pushing up, and we've been seeing futures up almost every night last week. There's some complacency. Bulls are gaining momentum. Bulls are gaining confidence. Bulls are starting to laugh at bears, right? And even the bears, who's been shorting this entire rally, now flipping to go long. Maybe even the cash people who closed out their longs down here with loss and then missed out this entire move, now finally want to get back in fear of missing out. So we are at that juncture where something is shifting. So for bears to take advantage at this critical juncture, they will need to gap down from here, somewhere here. You see that long-term moving average? Somewhere from 295. They have to gap it down. No march. We talked about this last week. No marching lower. No playing games. Because bears are more like furious when they bring it down versus bulls, right? They will probably gonna need another 4 or 5% gap down. They're gonna need about another limit down. They're gonna need about 4-5% gap down. Another one, something like we've seen in March. You see that in March? You see those gap downs, man? Just scary, crazy gap downs. We're going to have to see about 4% gap down, 4% or more. And we have to gap down through this entire gaps here. Because there's gap here. That's also two-part gaps. There's one part here, there's one part here. We're going to gap it down below and come and fill this gap. You see all the short-term moving averages? So bears need to gap it down, maybe come to about 279, and then bring it down. They're probably going to bring it down fast. That's how bears like to operate. They don't want to hang around. They don't want to grind around. That's how bulls operate. They grind all day, and then they push up little by little, little by little, little by little. Remember we talked about that last week. If you let bulls hang around, they're going to bring it up. So when bears gap it down, what you're going to see is you're going to see some big, fast, bloody day. And then come and fill this gap and let the price get below it. And you see the short-term moving average start to turn. And the next stop will be 260. That's it. And we'll have to because of this gap, we kind of have to reassess the situation. But for sure, you gotta kill this gap. Have to kill this gap, because you see a gap down here, and bears bring it down and start fizzling here right on the moving average, the blue dotted moving average. And if that becomes support, that's gonna be another dip for buyers to accumulate before going higher. So you can't let's say if bears bring it down 4%, right? 4% gap down. You can't let bulls hang around, because this moving average is hovering around this vicinity, right? It's like a guard. This moving average is guard, because it did act as strong support here. You see that? It's going to act as strong support there. Bears need to completely dismantle, completely crush it down. This moving average, right? Just crush it down. heavy to the downside, bring it all the way down and fill this gap. You do that, you got a chance. That's it. There you have it. There you have it. This one thing happened for buyers. Gap it up here. It's all over for the bears. Bears, gap it down. But bears got to work a little more. Because bulls got the momentum now. That's why. Bulls have the momentum. 35% run since the March lows. Bears have to work harder. They can't just gap it down 4% and then they got to work harder to bring it down to fill this gap. We see something like that. It could be over for the bulls. And bears can bring it down pretty hard. So if this one thing happens for either bulls or bears, it's all over for either bulls or bears. But like I said again, I'm saying it again, bears got a little bit more work to do because these moving averages is rising and because we got that momentum, that 35% run momentum there, right? So obviously, going into next week, we'll continue to talk about this. We'll continue to go look at, as we've been doing last week, the daily update, and we'll keep following up on it on a daily basis. But that's the analysis there. That one thing is going to be very, very important. So we'll be, depending on your bull side, your bear side, or it doesn't matter for you. It's going to be, I think there's some exciting, opportunities is to come. So let's go to semiconductor. Yeah, I spent about 21 minutes already, so we'll try to get this done in about 10 minutes here while all these tickers there. So semiconductor obviously looks similar to, I have to say, NASDAQ. We're not quite up here because NASDAQ is very near all-time high. We do have a big gap here. That's the gap that, probably bulls going to go up there and fill it. It will be better for the bulls to come and fill it. Either go up here and gap it up again or come and fill it. But we do have left shoulder, head, right shoulder type. And there's no longer downtrend in semiconductor. You know why? That's what you call what? Equal highs. We no longer have lower highs and lower lows. We now have an equal highs. We now have what it looks like left shoulder, head, right shoulder. When you see something like that happens, you want to give benefit of the doubt to the buyers in the longer term. Right? Semiconductor also had pretty good amount of, that's 45%. And we're only we're only how much away from the all-time high? From the recent peak there, less than 10% away. So semiconductor is also turning bullish here. Now it's trying to what the bulls are trying to do is bulls have formed this equal highs to make this into a trendless setting, and then potentially turn this into a reversal pattern, which is inverted head and shoulders, and break out and continue higher. Let's go to Apple. I'm still fully long on Apple, that I've been accumulating some of these lows here. I'm still fully long. I added it more. I tweeted out, I don't know if you guys remember, but I tweeted out when this thing came down that this was back in what? Yeah, April 21st. You can go check in my tweet. That's where the moving average, right, clusters there. I actually bought more there. I bought that dip, and as of today, I'm holding full position there. But where I think did we fill the gap? We filled the gap. We just filled the gap. Yeah, it looks like we just filled the gap. Let me check. 25 minute. Actually, no. So we got a little bit left here. But look at the shaved top. Very, very strong accumulation throughout the day. And my indicator, you see that green shade. That's where accumulations start occurring, and you can see continuing, right? That blue tells us that there's a distribution happening, and as soon as the green start coming about, you can see that accumulation has been continuing. We saw that little dip to retest the moving average, right? And continue higher. And I want to continue to give benefit of doubt to the buyers. And as you know, I'm a long-term investor. Yes, I am, I am profiting in my positions, but that's not where I'm going after. You know, I mean, just think about, let's say if I was long here, which I was, and I was buying these dips, and what if you just, okay, well, we're near all-time highs, so I wanna close it out, and then you missed out this move, right? And obviously there's always risk, man. Either you close out to get the small gain. It all depends on your time frame. If you're a short-term trader, then maybe that's, you know, that gain is, you know, that's your target, then that's your gain. And my target is much higher, probably about, you know, 400 or something like that. Again, I'm a long-term investor. When I get into a position, I hold much longer. So I want to continue to give benefit of doubt to the buyers. Any kind of, you know, like steep decline, maybe come back to retest some of these levels, 286 or something like that. That's a good level to buy, you know. Doesn't mean it's going to bounce right at it. It's going to have its dances. It's going to have its shenanigans. But, you know, if you're bullish in the long term, these pullbacks should be an opportunity to accumulate more. Let's go to Microsoft. I don't have any positions in Microsoft, but, you know, Microsoft's been very, very strong. We're just very near all-time high now, right? You can see right there, we're just very near all-time high. Microsoft has been a leader, and anywhere I look at it, it's bullish. There's no bearish connotation, right? It's been grinding higher here, so that's a little bit vulnerable. Some of these candles shows us this a little bit weak, but you should never be this. You know, you don't let it deceive you, because that's what I'm saying. That's what everybody's thinking. It's like, wow, man, that looks weak. That looks weak, and you start getting into puts. Next day, this thing gaps up, and you see a big bullish candle. That also can happen. So you don't just, you know, because if that's you don't place a trade like that. You know, I don't know. At least that's not how I like to do things. Like if I was trading Microsoft, I would never go long here, right? And if you want to be short term, go long would have been better. It would have been the best if when this thing came about to retest recent low, that would have been good level to go long, and then hold it if you're maybe a swing trader. And then as it gets to near 187, you close out, I don't know, half of your position, call options or whatever. That would have been a great trade setup. But long term, short term, mid term, all bullish. You know, with kind of a 50-50, are we going to like gap up and have a big breakout to the upside, or are we going to, you know, pull back? If we pull back, probably a good level, some of these levels to, you know, accumulate longs there. Let's go to Zoom. I owned Zoom before, and I was buying at these levels. And as you guys know, that I never chase. I always like to buy it when stocks are undervalued. And so recently I closed out all of my long positions up here, and that's when we got into, I thought it was extended, so I took gains, and then I reallocated that funds to some other stocks. So I do not have longs on Zoom, but that does not mean that it cannot go higher. It just, this is a level that, you know what I mean? Like, I don't want to start chasing up here, obviously. That's how I like to play it. I like to go long down here and then take my profit up here, right? Buy low, sell high. A lot of people, they like to buy high and sell low, right? Because they like to buy it when everybody's going long. That's her mentality, right? When the stock, that's why, you know, I tweeted out the other day that, you know, if you want to start buying, you want to go long on some stocks, you want to buy some stocks, you want to accumulate some stocks, don't buy things that are like, that everybody's talking about. You know, on Twitter and stock Twitter, like, oh my God, like, this stock, Beyond Meat, Peloton, Ubers. Like, you want to go long on stocks when everybody's scared. You know, obviously you got to know, like, you know, where to buy, which level to buy, good level to buy and stuff, and how long you're going to hold. But when Zoom was down here, like, there wasn't a lot of huge talk about it. People weren't really talking about that, right? That's where you want to get in. And then when you start really thriving, and that's where you want to get out. You know, but overall though, it looks like higher lows and higher highs. I see a little bit of divergence on the weekly chart. I see a little bit of extension on the weekly chart, but I still want to give benefit of doubt to the buyers, because we still cultivating higher highs. I actually think there will be some up and down shenanigans here. We're gonna have a quick pop, pull back, quick pop, pull back. That's what I think is gonna happen. Let's go Beyond Meat. I'm actually kind of watching this one because I do see weekly bullish divergence on this one, and obviously I can't, you know, chase it up there after this kind of move. What I like to see would be like maybe go up and then maybe we see a pullback, and maybe you see that, you know, that blue moving average coming down, like coming up like that, and maybe come back to retest. If we see something like that, that's where I like to buy, but I don't like to buy it here. So I'm watching this. Looks like potentially a big double bottom, if that's the case. Sometimes though, sometimes we never see a this is a neckline, right? Sometimes you never see the retest. Sometimes, most times you do see a retest. But it's tricky though. A lot of times what happens is on a retest, sometimes it goes up and comes all the way down and comes perfectly in that vicinity and bounce. Sometimes it goes up and pull back halfway and then bounce. Sometimes it come down even lower and then bounce. So, you know what I mean? Like it's gonna get tricky on the retest. It's never like gonna give you like perfect green light where you can go long and then everything is it's not gonna do that. Sometimes it just goes straight up. So you really gotta know, you know, what your strategy is gonna be. And I'm willing to just let it go if I don't see right setup. But looks like we're breaking out here, and I think it's gonna continue. But I'll be looking to go long on a pullback. Let's look at a Peloton. Peloton is looks like, look at that's the inverted head and shoulders. We've been talking about inverted head and shoulders several times here. See that? That's a neckline. What happened was we saw a gap up. So the gap is always great because when bulls deploy gap like this, if the bears bring it down and fill it, that's going to act as strong support. Only risk bulls have is if bears may be gapping it down below 37. Then this is going to turn into an island top, and that's going to make things pretty hectic, and then it will come down to maybe retest that moving average. So that's the only thing you should worry about if you're long on Peloton, is this thing gapping down. If not, if bears march it down, fill this gap, it's going to act as support. And if we do fill that gap, I think that's a good level to go long there. I have no position on this, but I'm watching. If we see the gap fill, I may go long. Let's go to LYFT. So LYFT is still on a downtrend, right? You can see that we're still on a downtrend. You can see lower highs, lower lows. I currently have no position on LYFT. I do have position. I own Uber and Square, but not on LYFT because Uber looks better as far as chart pattern is concerned. Uber looks much better than LYFT. So for LYFT to change this trend, because you have to give benefit of the doubt to the bears in the long term. Correct? So you can see the longer term moving average is declining. All these in short term moving averages kind of moving sideways now, but it's a bear sentiment. So it's difficult to go against the current. So we may see a pop. If we can get above that prior resistance here, then potentially get up here and then retest that. But if you're a short-term trader, potentially you can go for that. But it's not easy when you're going against the current, right? So I think I want to give benefit of the doubt to the bears. I think the best setup would be, you know, this thing doing something like this. I'll show you. It will get my attention to go long if we see something like that. Obviously, you know, the market, this stock isn't gonna do it perfectly like that. It's gonna do its shenanigans. It may come halfway and then bounce, or it may come a little lower than a bounce. It's always gonna be a little bit tricky, but something like that. You see something like that. I want to see a formation of left shoulder, head, right shoulder. So you can go long right on that kind of a, you know, anticipating a breakout that's a little bit riskier. And then, or you can wait until the neckline gets taken out and then you can go long upon breakout. But a lot of times when you want to go long on breakout, it gets tricky. So you want to wait until the next pullback. So, you know, you just always have to have you have to have, okay, so am I going to go long here on the development, right? On the development on the right shoulder, or are we going to wait for a confirmation, right? So that's something that, you know, because you want to wait until the trend is reversing, especially for long-term investing. I mean, if you really like fundamentals on LYFT and you're going to hold for the next 10 years, no matter what it does, then you can go long here and hold for 10 years. But you want to get a good entry and you want to be more strategic, then that's what you want to look for. You want to wait until this trend changes. At least you want to see some sideways type of consolidation type of move, and then, you know, development of uptrend before thinking about it. I'm long on Uber. I'm actually been a long-term investor since like 2019. I've been accumulating here, here, here. Recently I bought here, here. You know, I think I'm slightly green. I've been holding for like 2 years, you know. But anyway, year and a half. But Uber is still a downtrend. But it's just a little bit better, because now we can see that we're getting up here, right? That's the important level. What we need to see is this thing getting up and then pulling back and then getting something like that, right? And that will be a great entry there, and then maybe, you know, somewhere up here on a pullback. But so I do own Uber, and I'm looking for, and you can see the price is actually staying above this long-term moving average. That long-term moving average did act as resistance right there. You can see that. So I think LYFT, yeah, we're still below that, quite much lower. You see that's the long-term moving average, still declining. The price is still below that level. Where Uber, looks like we just broken above it. And in a shorter term sense, we do have higher lows here. So that's kind of what I mean. It's like I was buying at these levels, and when we saw the COVID-19 decline, I didn't close out any of my positions. I held it, and then once it starts to kind of recover, I started buying more, some of these dips here. And so now my position is, I think, slightly green at least, and there was that drawdown, and then I was able to turn it green. And again, I'm a long-term investor, so I'm not going from here to here to here. Ultimately, what I want to see from Uber is this thing getting into an uptrend that could last for the next 2 to 3 to 5 years, and I want to ride that. Square, I've never really invested in Square until recently. I've always wanted to invest in Square, but you know my style. I cannot chase these up here. I cannot. And every time I look at Square, you know, even maybe these pullbacks were better to go along, but every time when I looked at Square, it was like either here, 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 here. So I was like, I can't chase it. Because again, I don't place short-term trades. I rarely do. And then it got into like this sideways move. I'm like, okay, I don't know. Yeah, that's also not going to be working for me. And then after COVID-19 decline, I'm like, okay, wow, now I think Square's down quite a bit. Now I think it might be attractive. So I think I went on somewhere here, added more here, right? It was same concept where I believe that this is going to be kind of a trap. Because I mean, you know, you've been following following me on Twitter, my blog, and my videos, that I was expecting the market to see a fast recovery. So when the market recovers fast, you're going to see some of these stocks going to recover fast also. Obviously, trend was down in the midterm though, but Square is a little bit different. If you look at primaries were still up, because if you do Fibonacci from here to here, that's about 50%. So primary had a big move and a big decline. I like that. I see, that's where I want to go long. I want to go long when we see a big decline, you know. Like this is what I mean is this is what I mean. You want to look for undervalued stocks, right, at a good price, instead of trying to chase it up here. Now it's gone up too much, and I'm gonna keep holding it, because my objective or my goal is with this position is that I want it to kind of get into a uptrend that I can ride it for the next year or 2 years or something like that. But fast move here. That's from the lows. That's 117% move. So I would like to see this thing going up, pulling back, and then doing something like that, and I might add more here, right? And some people ask me like, well, why don't you close it out here and then added more here. See, the problem with that is, that's okay, let's say I close it out. And then I'm waiting for it to go long at like 70, but then it comes down a little bit and then it goes without me and I miss out next, you know, another like 30-40% move. That's the difference. If you're a short-term trader, then yeah, you're gonna take your profit and look for next setup. I do have a short-term trades that I place, but this is gonna be a long-term investing. So rather closing it out, I'll look to buy more on a pullback, and I'll keep increasing my size and my position, right, until my next target is reached, and then I'll take big portion out. Let's go to gold. Let's do this quickly here, almost getting to 40-minute mark. Gold's broken out this long-term trend, continuing higher. You can see even when this broke out a 5-year consolidation, it never came down perfectly to this neckline, right? It stopped short, it came down. Even with that COVID-19 decline, we came down here, got right very, very fast. We got back up, but it never truly came all the way down where everybody's looking at it. That's why sometimes, you know, you can't wait for the perfect setup because there's no such thing as a perfect setup. So I want to continue to give benefit of the doubt to the buyers in, you know, in gold, right? And I talked about how if you want to go long on gold here, instead of going long on gold, why not try silver? I talked about silver on the last weekend video. Why not try silver? Because silver really needs to play catch up. And so I think, you know, silver is a little bit better deal than chasing gold up here. And I own gold, silver, GDX, all of that, and some of the gold mining stocks in my portfolio as well. I've been actually accumulating since down here, since before the breakout. So that's kind of what I mean is like, you know, when you go to monthly year, I knew it wasn't gonna be easy trying to find perfect level to go long. So I actually started going long, I think somewhere here. I think some of them I even like got long here a little early here, and I had to wait. I had to wait for these pullbacks and go through these drawdowns before I was able to get ride that kind of move up there. One last one, let you guys go with this Bitcoin, and here we go. So Bitcoin, we talked about this. The wild card is activated. So last time, you know, I don't know, a couple weeks ago, several weeks ago, we talked about it when the, you know, Bitcoin was down here. I don't own Bitcoin. I don't have any Bitcoin at this point, but I'm getting kind of interested because we talked about how, okay, you know, if this is going to be the wild card, we do have a lower highs and lower lows, but if this gonna become a trap, then we may, if we see a breakout with the high volume coming out, we may see this thing going all the way back up to retest that falling resistance. That's exactly came up, and I was kind of thinking maybe we see a little slowdown here, a little bit on the gap, but the gap got filled. What I like to see is maybe a little consolidation and then break out and come here, because we're still in a downtrend, right? Lower highs and lower lows. Make equal highs, pull back, and then do something like that. Obviously, it might not do something like that. It might do something totally different. It might not even pull back. We might just break out and continue higher. Maybe you will go up, pull back a little bit, and then continue higher. That's why, you know, sometimes when everybody's looking at exact same thing, it's going to do something completely different. So you just really have to know which level you're willing to go long and your time frame. But we're still, as of today, even though we had a very, very good momentum to the upside in the minor term, we're still in a downtrend in the long term. So I still want to give benefit of doubt to the buyers until I see a momentum changing and uptrend developing. And I'm willing to go long in some of these levels on the pullbacks, right? So S&P Spider is trading at 292.44. I think we had a tremendous run from the buyers, and that one thing that I talked about early part of this video, it may not happen. We may not happen, but if it does happen, going into the next couple of weeks, then you know exactly what to look for, right? You guys enjoy your evening, and good luck trading next week.